Welcome to Real Estate Radio Power Investing, an informative and engaging hour discussing everything you need to know about the world of real estate investing. Your host, Tom K. Wilson, provides you with insight and guidance from his years of experience as a successful real estate entrepreneur on how to buy, sell, finance, and invest in real estate, and much more. Now, here's your host for Real Estate Radio Power Investing, Tom K. Wilson.
Always good to have you with us here, and thanks for tuning in to Real Estate Radio Power Investing, where we empower you with the education to maximize your investing success. We're broadcasting from our Wilson Investment Properties headquarters in Silicon Valley. I'm Tom K. Wilson, your host for the weekly program on real estate investing. If you can't make the live show, you can go to our, you can catch all of our broadcasts on TomWilsonProperties.com, and you can also catch them as podcast on iTunes and on YouTube. Also, you can go on TomWilsonProperties.com, who is the Wilson Investment Properties is the sponsor of this program, and you can go on the website and sign up for our weekly newsletter, which tells you about what's going on in the world of real estate and the world of economics as it affects real estate. So that comes out every week, and also by signing up for that, you can also get access to the syndications that we offer for multifamily and commercial properties, which typically allows you for $50,000 or $100,000 to invest in quality of products that normally only large investors or institutions can have access to. We're going to do our program today on Houston, and I don't know that it's been quite a while since we focused on this market. We try to pick different markets around the country and give you some insight as to what you like and don't like about those particular areas. And to discuss that with us today is our associate and friend of Steve Fithian, who's calling in from his Dallas office. So Steve is a 4-decade real estate investor, broker, and syndicator. He's the owner of SVN Trinity Commercial Brokerage Firm, also of the residential brokerage firm Visions Realty, and importantly also owns a property management company that manages these products. So that's a very strong combination of experiences and services. And Steve is a graduate of Claremont McKenna College and started off in Southern Cal and then moved to Dallas. And his degrees in economics and accounting. Steve, nice to have you back with us.
Thank you. I always enjoy it.
So I think the first thing that we should talk about before we talk about Houston is the state that it's in, and that is Texas. Steve, from an investment standpoint, what do you like about Texas?
Well, it's been the best decision that I've ever made from an investment standpoint. I started studying the market back in the early 80s, and then by the late 80s, I was spending the majority of my time here getting licensed and studying the market, and then actually started purchasing property here in 1990. And when I was doing it at that time, I expected that this would just be a temporary investment, that as the market changed, that I would sell out and go back to California. But fortunately, that is not what happened. I mean, it was the best market that I've ever seen, and the cycles last way longer than I had experienced in California. So the assets that I were purchasing in 1990, it didn't even begin to slow down until 2002, which was just after the nation's economy kind of went down in 2001 after 9/11. But the Texas economy continued to go strong after that, clear into 2002. And then when it did slow down, it was just barely just taking your breath. I mean, it was not a difficult down market at all. And then it just picked up again. And so my experience starting in the late 80s is that Texas has produced a tremendous amount of jobs compared to other states in the country, and our population has continued to increase. So I have a very favorable impression upon the state. I've lived here now 27 years, have a very successful business, and have really enjoyed investing here.
We, as some of my listeners know, but probably many do not, I bought rental properties in Silicon Valley in the 70s. And after 30 years, I took a look at it and realized that the rents relative to the value of the product had dropped by like a factor of 3 or more. And so I wanted to move those assets into some place that produced more income and yet had a strong future. So I spent about a year and a half studying the country's major metros, and Texas came out on top. And that's one of the best decisions I made too, was to start investing there in Texas. We like that it's business friendly, that it's energy independent, has affordable housing, has a very educated and skilled workforce, low cost of living, and a very broad-based economy. You know, having been here 49 years in Silicon Valley, I love it. Love how we've changed the world over and over again. Now it's really the whole Bay Area that's contributing to that. However, it's largely a NASDAQ economy. And if when NASDAQ goes down, so does real estate values and everything else with it. Whereas we, I'd say in Texas, it's a broader-based economy. Wouldn't you agree, Steve? I
definitely agree. You know, especially the DFW market, that's probably the most diversified out of all the cities. But each of the cities, I mean, when I first came here, I went to all of them, Houston, San Antonio. And when I say went to all of them, I was specifically looking for real estate, specifically looking for the dynamics of each city. And now looking in retrospect at all 4 of the major cities, San Antonio, Austin, Houston, and DFW, all of them have done just superbly over the time frame that I've been here. DFW, again, is just a little bit more of a stable, broad-based, but all of them have done well. And there are benefits from areas or cities that have a little bit of more volatility in the market if you pick them at the right point in the cycle.
Okay. So our program today is we want to paint the bigger picture of where Houston sits. So the state as a whole was very, very strong. We like that. And you and I have invested a lot in Dallas. And we've both always liked Houston. But how would you characterize Houston, and what are its pros and cons compared to other cities in the state?
Well, it's a large city. It's the 4th largest MSA in the country, just roughly around 7 million in Houston. So that is a very large city.
In which, by the way, for our listeners, that's just about the same size as San Francisco Bay Area, and also about the same size as Dallas, DFW.
Right. And in spite of what you might think about the Houston economy is strong. I mean, they've created 1/3 of all new jobs in the U.S. since the last crash. But I'd say that there are some timing advantages in getting in to Houston now. The hurricane that was there last September, it obviously did some considerable damage, a lot of damage to residential, some damage to retail and some of the other product types as well. But there are a lot of funds going into that area and a lot of jobs coming about to pull the area out of the hurricane. So I certainly, when I saw the devastation there immediately after the hurricane, my immediate thought is, well, that's going to hurt Houston. But then I started really poking around at it, doing some research. Well, what happened, after Katrina? What happened after some of these other major events? And it's really kind of interesting that some of the product types actually flourish after a major event like that. So I've certainly come to the conclusion after doing research on it that the timing is very positive for investing in Houston, and so the hurricane is one big reason why. Secondly, Houston historically had a lot of exposure to oil, and it still has a tremendous amount of oil jobs, but their economy is much diversified over what it was 20 years ago. Petrochemical is huge, and there's a lot of petrochemical expansion along the coast, and a lot of these jobs are, huge jobs that have been going on for 3 to 5 years, and then a lot of those jobs are the expansion of the infrastructure and the machinery is about completed, and those companies are going to be hiring. So I think because of with oil at the pricing that it's at, even though it's not as oil dependent as it was previously, with prices where oil is, you've certainly got that at the bottom. You've got these petrochemicals that these companies are going to be doing a lot of hiring here in the next several years, and you've got coming out of the hurricane. So from my perspective, all those lining up at the same time gives a very good buy signal, in my opinion.
A lot of people don't realize that there's a significant expansion for a long time. We're not just talking about a few months, but years after a disaster like Harvey was, and Harvey was a huge impact, and you indeed sympathize with those who are individually affected and displaced. It's a terrible thing that happens. It's unfortunately a natural part of the planet we live on. But my gosh, it certainly removes some supply. So the products that are left there, whether it be houses or whether it be industrial buildings, they are in a little bit higher demand relative to because there is less supply there. So that ratio strengthens. And then there's a lot of construction that goes on for a long time. So it takes a long time to recover from a disaster like that. So Houston is, I think, already past the worst of that disaster, and is probably going to have benefit now from that expansion. Whether you look at Katrina or Sandy and other disasters in the past in the country, the real estate and the economy takes a dive right away, but after that it climbs back up very strong, and I think that's what's going to happen here in Houston. So we are talking today about the Houston economy and Texas, and we will be back with Steve Fithian here in a very couple moments here, and talk some more about the stats or the specifics about Houston and what we think its future is like. So stay with us.
Welcome back to Real Estate Radio Power Investing. Streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, visit TomWilsonProperties.com. That's TomWilsonProperties.com. Again, your host for today's edition of Real Estate Radio Power Investing, Tom K. Wilson.
Thanks for being with us today. Our topic today is Houston, and our guest is Steve Fithian, who is a multi-decade investor and broker and property management owner in Texas. And we've talked about what's great about Texas, why we like it, and we're talking about Houston, and that Houston has certainly had a big hit here economically from the Harvey hurricane and the resulting floods, but is past the worst of it and is now expanding. And historically we have expansions in the economy and real estate after disasters in the United States, because there's a lot of construction and a lot of things are then developed after that. and it's so it actually turns into a good thing from an economic standpoint after that. Steve, you were talking a little bit earlier for the last break here about the oil factor. You know, I too have heard people say and feel that any place that's tied to oil, that the oil price as it goes up and down, it tends to tank the economy as their perception, and in actuality it does not. And I think one reason is that people don't realize that there's a lot of different factors of oil. It's just like saying, well, technology or any other sector, it's not all the same, because in oil you've got exploratory and development, and maybe that part slows down, but then you've got production, and you've got distribution, and all of those, the thirst for the product is still there, and all that has to keep on going. So in Houston, yes, has a larger part of its economy tied to oil than, say, a Dallas or other places, but it's not so much that just the oil price makes it go up and down as strongly as maybe it did 50, 60 years ago. Would you add anything to that? Or?
No, I totally agree with you. I'll also say that the oil industry, the strong companies out there, Exxon, Chevron, BP, those companies, they make such long-term decisions. And so if the price of oil is down, I mean, their stock might get hit, but by and large, they have huge R&D budgets that, again, they're buckling down and they're there for the long haul. I mean, a good example of that is Exxon. Back right before the last downturn, gas prices were, strong, just like oil prices were, and Exxon made a major purchase of XTO out of Fort Worth. XTO was one of the largest and most prominent gas company as far as exploration and production of gas, and so Exxon bought them. And so even in this downturn, they've continued to invest money, for example, specifically in XTO. And Houston, down in Houston, Exxon has a major presence, and even though their corporate headquarters is in the DFW area, down in Houston they have a lot of office space. And bottom line is they're moving XTO from Fort Worth to Houston, and the Houston market hasn't even felt those jobs yet. They're going to start coming online this coming summer. So all I'm trying to say is that in the oil industry specifically, there's very long-term decisions that a lot of them are not impacted as much by the price of oil. Obviously, exploration is, but there's many other different factors in the oil industry.
Very good point. Throw out just a few stats here about Houston. It's Houston has a GDP of almost $500 billion. $463 billion. It's a huge economy. The only ones that are larger would be New York, LA, and Chicago is slightly, and then fifth, by the way, is Dallas. So it's two of the five largest economies in the country. Employment's at an all-time high. We've got 5.6% unemployment. However you want to spend that number, but at least on a relative or comparison basis, it's significant. And we've got average home price is very affordable. So even though it's recovered very nicely since Harvey and since the crash before, we're still under $200,000, like $182,000 for an average home, which means that only $31,000 worth of salary is required to qualify for that house. That's something we haven't heard in a long time here in California. So we're talking today about the Houston economy, the Houston metro as a potential place for investment. And we're talking with Steve Fithian, who is from Dallas, who is a broker in that area.
Welcome back to Real Estate Radio Power Investing. Streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, visit TomWilsonProperties.com. That's TomWilsonProperties.com. Again, your host for today's edition of Real Estate Radio Power Investing, Tom K. Wilson.
We have with us today Steve Fithian talking about the Houston market and why we like it, why we've been looking for investments there as well as other places in Texas. And we talking about the economy there and hurricane impact and so forth. And it's no secret. We've done our show for last week was on industrial, and we've been looking for industrial products and for quite some time now. So, Steve, can you talk to us a little bit about how that asset class and has been affected by in Houston?
You bet. And I think it kind of displays the strength and the resilience of the Houston market. What I'm looking at are a couple of charts of the industrial market in Houston. And for example, overall occupancy in industrial going back all the way to 2012, it was averaging 6.4%. And that's very bullish. I mean, that's a very strong market, whether it be, industrial retail apartments, to have a 6.4% vacancy as a historical average from 2012 to 2017. To me, that shows the strength of the market in Houston in the same time frame when, for example, oil prices went low. So again, dispelling the belief that oil has such a significant impact on Houston. Mm-hmm. But it also, to me, it just kind of indicates why I'm so focused on Houston and also, frankly, the industrial market right now. Because of the impact of the hurricane, there's a lot of roofers, specifically contractors, that have gone into that area to help in the rebuilding, and there's a lot of need for supplies. I mean, roofing materials, for example, use a lot of industrial space. So when you have a market that only had a vacancy of 6.4%, and then you have all these additional demands on it to try to help the area rebound, that's extremely bullish on industrial. So just to sum up, what I'm trying to say is that the market in Houston was already very tight. Then you throw a hurricane at it, and it provides a lot of opportunity.
And some of the articles I've been reading have indicated that that a lot of the companies that are in the oil and gas business there and in Houston have, with the drop in oil price, have had to tighten their belt. And there's been some weeding out of some companies, but a lot of them have learned how to be profitable in spite of lower prices. And now that the prices are coming back up, and number of economic projections I've seen indicate they think it will go up some more and will stabilize at some place higher than where it is now. Then I think those companies that have learned how to do well at the lower prices will do even better.
Totally
and those
agree.
Companies all need, and those places all need industrial space.
Right.
Just looking here at some other charts that we have, here's an interesting thing that, you can look at a lot of economic data that's really down in the weeds, but sometimes, just look at some basic things that kind of appeal to the common sense. I'm looking at a report from U-Haul International, and they show where people are moving from and where they're moving to. And the number one destination city right now in the United States for U-Haul's report is Houston. So there's a reason people are moving there. We're talking about Houston, what we like about it, and what its economy is made up of. We're doing that with Steve Fithian, who is a long-time, multi-decade investor, broker, syndicator in Texas. And we'll talk some more about the Houston stats here in just a moment.
Welcome back to Real Estate Radio Power Investing. Streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, visit TomWilsonProperties.com. That's TomWilsonProperties.com. Again, your host for today's edition of Real Estate Radio Power Investing, Tom K. Wilson.
Our show today is talking about Houston, and we have Steve Fithian with us, who has brokerage and firms and property management, and is our co-syndicator on a lot of our deals, who's talking to us from Texas, from Dallas here today. You were talking about the how strong this Houston economy is in general, so I don't have the stats. I think you do. But how have leasing rates done in the last few years?
Well, when you have a occupancy as high as 94%, which is what Houston has averaged, for example, in the industrial market since 2012, then that bodes for very favorable rental increases. So, for example, in 2012, the average industrial lease rate was roughly about $475 a foot. And then that has increased steadily since 2012. So the trend line is actually showing up in the over $6 a foot. So that's a pretty substantial increase, $1.50 over on a base of $450 over a 5-year period of time. So very favorable rent increases. And then with that, the projection that vacancy is going to continue to be very low just because of the impact from the hurricane. In my opinion, that means the forecast for rental rates into the near future would be very bullish as well.
Mm-hmm. Okay. Just to give our listeners here a feel for some of the companies that are there. So yes, there are a bunch of oil-based companies, but again, as we've been saying, it's not the dominant economy anymore. But we have, I think, a dozen companies now that have revenues of over $10 billion a year. So yes, Phillips 66 is the largest with 72, but we've got Cisco, ConocoPhillips Enterprise, Plains GP Holdings, Halliburton Waste Management, Kinder Morgan. Let's see, some of the other Calpin is there as a major one. We've got AT&T has large facilities there. Exxon, Boeing, Chick-fil-A, I believe is their headquarters. Coca-Cola, Delta, Home Depot. Large, again, very broad-based. If you stripped petroleum out of it, it would still be a very large economy with a lot of diversity. Also, it's a science and business incubator. It has over 100 companies. Forbes named it as one of the incubators that's changing the world right now. So yeah, we're proud of our local Silicon Valley and its continued leadership, but we have other places like here and Dallas that are and Austin that are also major contributors. Shall we talk about the port? Steve, you got any numbers about the port? I have here that there's 220 million short tons of domestic and foreign cargo in recent year, and that's before Panama Canal opened up. What else do you have there?
Well, first off, it's 25 miles long, so we're not talking about a small port here. It's the busiest port in the United States in terms of foreign tonnage, and it's the second busiest in the United States in terms of overall tonnage, 13th busiest in the world. So it provides a huge economic benefit to Houston. Annual cargo tonnage was 212 million in 2006. Annual container volume 1.6 million, and I'm not familiar with this, but TEUs in 2006. Revenue, I know what dollars are and the significance of that. And so the net income was 42. Let's see here. Economic value, U.S. 118 billion. Attributable jobs, 785,000. So it is a significant industry. The port is a tremendous benefit for not only the United States, but obviously for Houston.
And with its proximity to the new Panama Canal expansion, it's going to benefit from that as well. Interestingly, a lot of people think that Houston, that must be all Texans and some folks from south of the border. Turns out there's over 90 languages spoken in Houston. Yeah, more than 90 languages spoken there, and it's got many universities there in the Houston area, and it's certainly a very, very, very cosmopolitan indeed. Houston ranks number 2 for the most millionaires per capita in the United States. So that's pretty significant.
Tom, I'd just like to point out, I was in Houston within the last 30 days, and I drove around very extensively, a lot up in the northwest part of Houston, all the way down to the southeast part, up into the northeast. So drove a significant amount around Houston, and it's interesting that I did not see any direct damage from the hurricanes, meaning that, it certainly did face a lot of devastation. But unless you went specifically in certain areas, it appears to be very vibrant. There was plenty of business people on the freeways, businesses flourishing. So I was just very impressed from this recent visit there.
You didn't see huge blocks of businesses with boarded up buildings, huh?
No, sir. I didn't see any of that.
No. Well, I'd say one thing I noticed is when you get ready to land there, I've been a few months since I was there, you get ready to land the plane, you look out the window and you see, just like in Dallas, you see cranes everywhere. It is
right.
It is amazing. You don't even have to land to see something's happening.
Yes.
Stay with us. We'll have a little wrap up and overview here with Steve Fithian on about Houston in general on Real Estate Radio Power Investing. So stay with us, and we'll wrap things up and give an overview for you, and also a takeaway.
Welcome back to Real Estate Radio Power Investing. Streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, visit TomWilsonProperties.com. That's TomWilsonProperties.com. Again, your host for today's edition of Real Estate Radio Power Investing, Tom K. Wilson.
Our topic today has been Houston, one of the fastest emerging major markets in North America, indeed. And we've tried to give you a little overview about that. Steve, you want to start off with some summary about your thoughts about Houston?
Yes. As an investor, I feel just very positive at this point. I think that our economy is doing very well. I think that, and I'm talking about the U.S. economy, I think that the global economy is very positive, and the growth that forecast for the future. And then in Texas, I just continue to be just utterly amazed at how we continue to grow, both population as well as economically. But more specifically on a micro basis, as somebody now that lives and derives most of their income, I do invest in other markets, but this is where I do my focus. I'm focusing now in Houston. I think that out of the Texas markets, that Houston has the most to benefit over this next real estate cycle. And we've talked about some of the reasons why. One of them, again, is the hurricane. Secondly, again, I think that oil prices have stabilized so that they have nowhere to go over the long term but up. And so I think Houston is going to benefit from that. The specific product type that I'm focusing on now, which is industrial, in Houston, it's just opportunity in spades, because it was already performing very well with rental increases, high vacancies, and now you've got the future anticipated benefit from continued recovery from the hurricane, from recovery from oil prices, from these petrochemical jobs that will be coming on board, from Exxon moving jobs up there. So all of this to say, I'm very bullish on Houston, and I'm focusing on Houston for the future.
And then to supplement that, we've got the new Panama Canal. Houston is a major port, I guess the closest major port, right, to the this side of the eastern side of the Panama Canal, and it's is already benefiting, going to benefit more from that as well. And so that is a big advantage for not only being a distribution center, but bringing in supplies and materials that's required for the continued construction and reconstruction post Harvey. We have some material here on Houston, on the strengths and where it ranks and so forth. If you are interested in getting a copy of that, you can email us at info@tomwilsonproperties.com, and we'll be glad to send that to you and for your consideration for investment arena. So also go to tomwilsonproperties.com, sign up for our newsletter, which gives you a weekly report on what's happening with the major events in the country relative to real estate and to the economy. Also, by signing up for that newsletter, you then can get access to our syndications that mostly by SEC regulations we're only allowed to offer to those that have a connection and relationship with us. So we encourage you to do that on tomwilsonproperties.com. And also on there, you can get access to all of our podcasts, and which are also on iTunes and on YouTube. So, Steve, thank you again for being with us and for your insights about it. And remember, the only thing that matters is what you do next.